Credit Suisse disaster, and Deutsche Bank, is it the next bank that is crashing? And an NFT investor lost $135,000 accidentally. So this is with the weekly catching up. Stay tuned to learn more. Hello and catching. This is Bernie with the weekly catching up, and a lot of things are still going on with the banks. Credit Suisse was taken over by UBS, as you have maybe followed. Why is this important for us? Why is this important for you especially? Because banks are ruling our system. So banks are currently so involved in the financial system. They are everywhere involved, and if the banks are going down, this is affecting you, this is affecting your life drastically. So that's why it is so important to know what's going on, losing just a little bit of money, but definitely losing less than others. And maybe you are getting out of that crisis, you're coming out as a winner, because crisis always also offer us opportunities to become a winner. So what's going on? We are seeing Credit Suisse still struggling with their bonds. So bonds are basically a bank or a government can issue some bonds if they need money. And so a government, for example, says, I need money now, I will issue a bond. And then people or central banks are starting to purchase those bonds. So the government gets some money in exchange for the bonds, and then they are paying some yield, interest rate on those bonds, and this should become a win-win situation. Now, what we have seen recently during the last years was that governments, for example, the U.S. government or European governments, they were just issuing bonds, and central banks were purchasing those bonds with fresh money. So that's why a lot of money was pumped into the world, into the banks, into the systems, into governments, into the banking sector, and it was just blowing up and blowing up and blowing up, and more and more money was pumped in. And if we're flooding a market with a certain good, in this case, this good is called money, then inflation is the cause. So inflation follows, and that's what we have seen recently. They have pumped in money into the markets. The inflation was going up, and now they try to bring that back by taking out some money again, by selling some bonds again to the governments back. And this was not really working. And now Credit Suisse was taken over. So there was a bank run going on. So bank run means many people start immediately trying to withdraw their money from the bank, and that's what we have seen in the past weeks, and that was why Credit Suisse was struggling, was getting into troubles. And now the same thing happens with Deutsche Bank. So Deutsche Bank seems to be struggling again because people are losing the trust. And coming back to the bonds, as Credit Suisse was taken over by UBS, another huge bank of Switzerland, the bonds that Credit Suisse was issuing to mainly institutional other banks, they are worth zero now. So there were $17 billion worth of bonds issued, are brought back to zero now. And now what we are seeing here currently is, or what's coming up very soon, that the bondholders, they are trying to years, and they are also suffering from not getting paid at all. The next problem that we see is UBS and Credit Suisse. Now they are together, they are coming together, and they are much bigger now. So their financial report sum is much bigger than the overall production in Switzerland. So that means if for whatever reason UBS is by the way, the German the German Chancellor Scholz, he said, Deutsche Bank is not the next Credit Suisse. Analysts say that, and the German Chancellor says that. And in my opinion, it's just to calm down people, to keep the trust as good as possible. But they are definitely, since years, or since 2 years at least, we're talking here at Katching Secrets, a proposal to get this situation under control. And he just says the governments, the Federal Reserve, the central banks, the governments, they have to just make sure they have to secure all deposits, which amount of deposits. So currently in the European Union, it's 100,000. In the UK, it's 200. In the UK as well, and in the US, it's $250,000. So up to that amount, your savings are safe. But that could change. We have seen that in the last. Laws have been changed just to mute, to calm down, to take away the voting rights from shareholders of Credit Suisse. So they were just standing there without any right to intervene against this takeover process of UBS. So this could happen with with all the securities. So 100,000 it's currently in the European Union, but this could change very rapidly. So they could decide over the weekend, okay, now your assets are just safe up to 10. Good. So that's the situation. That's where we are standing currently. What are the solutions? Let's talk about solutions. So Elon Musk, as said before, he proposes that the governments and the Federal Reserve and the central banks, they have to secure all the deposits without limits. Goldman Sachs, on the other hand, says we are facing a commodities supercycle. That means commodities will skyrocket. So, and gold, silver, gold has proven through all the centuries that it is inflation safe, that it's a safe haven for your assets. The only thing with gold could be, again, that the governments are forbidding to possess gold, to own gold. And that's why it's important, if you purchase gold, to purchase it anonymously. So go into a shop, put the cash on the table, take your gold in exchange for that. In Germany, they have limited this to 2,500 euro per day. In Austria, it's limited to 10,000 euro per day. So you are just allowed to purchase 10,000 with one purchase. And so nevertheless, in my opinion, it's good to have gold. It's good to have silver in smaller chunks, in bigger chunks, because this will bring you through the pandemics up to a certain level. Not through the pandemic, through this virus called the banks, and so this will give you one opportunity. The second one is stocks. So in my opinion, it's good to have stocks, because this is, you're investing into companies that are potentially solid. So we are issuing a list, our golden menu, which consists of around 100 companies that are pre-researched, fundamentally pre-researched. And those companies, they are solid companies, and you invest directly into the companies without an intermediary sitting in between you and the company. I always get asked, what about ETFs? So are ETFs safe in these times? ETFs are basically also issued by banks, usually by large banks. So we're just investing in ETFs that are issued by large banks. So if you're investing in an ETF, I think that's a good decision. So an ETF will also perform, especially when you take the big banks like BlackRock, Vanguard, and also choose some of them. So some of them will survive the crisis. So if you invest, for example, so really broad investments, then in my opinion, I am fine. I'm confident that this is another pillar that takes me through the crisis. The third option is investing in cryptos. We are seeing that now. Currently, cryptos are going up, and this is the transition to the crypto part of today's weekly catching up. Bitcoin just recently went to $28,000, and it came back again. So in my opinion, it's not urgent to invest in cryptocurrencies, but it's a good time. It's coming back now a little bit, and then it's a good time to step in cryptocurrencies. Nevertheless, we don't know. So cryptocurrency in the world since a little bit more than 10 years. So we don't know how they behave really in a crisis. And this is a little bit of a black box. So cryptos are, it seems that they are used now by investors because we are seeing that money is coming into the crypto space. And to finalize for today, we have a funny thing coming up. An investor, an NFT investor, was in an NFT. It was a CryptoPunk. CryptoPunks are basically they are issued by the CryptoPunks, and they are very, very famous NFTs. So an NFT is a non-fungible token. This is, you can purchase 135,000 K, and I just want to scratch the surface here. It's possible to lend out your NFTs and to put a security on top of that, and then you can purchase another NFT with one NFT as a security. And he wanted to do that, but on the process on that, he made an error, a mistake, and now he was sending his NFT into a burning process, and now his NFT is gone forever. So $135,000 are blown up and gone. So this was the news section. Now let's head over to the investing pie. If you have any questions, put them down into the comment, and I will be happy to answer them. If you have any questions on investing about it to our pie, last week we invested. Let's have a short view on it. This is a really basic strategy. It's taking up, I would say, 15 to up to maximum 30 minutes per month to do your investings, to manage your investings, and it's a very good mixture of having your own fund that you like, and on the one hand, and on the other hand,